Good afternoon, traders. Welcome to another live trading webinar where today we look at NFP trading for February 2026 as we unlock high impact news market moves for this high impact news event. But before we start, just to bring to your attention that any opinion, news, research, prices, analysis, or information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you're looking for investment advice, then be sure to contact a regulated financial advisor. For those of you who haven't met me, my name is Tumelo. I am a senior market analyst here at CWG Markets South Africa, and I'll be taking you through this live trading session today as I analyze the markets, scan the markets to look for opportunities to capitalize on, and you can see exactly how I trade high impact news such as non-farm payroll in real time. To keep up to date with daily tips and market analysis, be sure to subscribe to the Telegram channel by scanning on the QR code and then clicking on subscribe or join the channel so that you can get daily market news and outlook, educational trading content, get webinar access and event updates, as well as official promotions and announcement from CWG Markets as well. So for the agenda today, we're going to be doing three things here. First, we're going to have a look at our economic calendar to see what high impact news are being released today, Friday the 6th. And then what I'll do is I'll analyze the markets, scan the markets, look for opportunities to capitalize on. And once I've done that, then after taking trades, I will provide an explanation of the strategical approach that I applied to the markets after taking some trades. So that's the agenda for today. This webinar is being recorded as well, so you are more than welcome to, after the session, to rewatch the webinar as well if there's any information that you'd like to recap on. Now, what is NFP? Now, NFP is one of the most closely watched high impact news events in the market, and it is an indicator in the US which has a high probability to have high volatility affecting the US dollar, as it provides insights into trends in the employment and labor market conditions in America. These are critical factors which influence consumer spending, economic growth, monetary policy decisions, as well as the general value of the US dollar itself. However, this NFP generally happens the first Friday of the month, as today is the first Friday of the month for Feb. And as we can see, generally we would have US NFP being released today, but as you can see there, it says tentative. Now, there's a reason why it says tentative is because of what we call the US government shutdown. Now, the US government shutdown has basically happened to the fact that the US Bureau of Labor Statistics has advised the markets this early week on Monday that the scheduled non-farm payroll, which was supposed to happen today, will be suspended until federal government operations resume. So what has happened is this has happened due to the fact of the government services shutdown. And this happened again in late 2025, which saw the largest government funding freeze on record, with short-term stopgap funding solution only providing enough operating cash to keep federal services running throughout the end of January. Now, we got to the end of January, and that funding was not agreed to, and despite another half measure to keep operational budgets in the black, the US capital continued to struggle to reach budgetary consensus, keeping key federal offices underfunded and leading to what we call a government shutdown. This happens when the Congress fails to pass law that funds federal agencies, and without this funding, the government legally cannot operate many of its services, especially those considered non-essential. Okay, so this has led to things like your shutdowns in your non-essential government services, including economic data releases, which include non-farm payroll. Okay, because this is a service provided by the Bureau of Labor Statistics and is considered a non-essential service. Okay, so because of that, that led to earlier this week on Monday to have the scheduled non-farm payroll to be postponed for a later date. Okay, so because of this postponement, it has led to no NFP for today. However, we do have high impact news on what we call our Canadian dollar, which is our CAD employment change and CAD unemployment rate. And the CAD unemployment change or employment change is an economic indicator that measures the net change in the number of employed people in Canada over a specific period. This is a critical indicator of the health of the Canadian labor market and overall economic activity, and has a probability to have a high probability to lead to high volatility on the Canadian dollar, because this has a significant influence on the value of the Canadian dollar. Same as your CAD unemployment rate is a key economic indicator that measures the percentage of the labor force in Canada that is unemployed and actively seeking employment during a specific period. And this indicator is a critical indicator of the health of the Canadian labor market and overall economic conditions, which tends to have a significant value of the Canadian dollar, which leads to a high probability to have high volatility on Canadian dollar currencies and assets in the markets, which tends to lead to high volatility in the market. So the objective is, during these high impact news events, is to catch these high volatile moves, be on the right side of these high volatile moves, and catch a lot of pips in a less amount of time, which is what trading is all about. So that is the goal of the session today. Now, before we get into the session, I just want to bring your attention to the fact that we do have 100% welcome deposit bonus for those of you that want to fund your account with CWG Markets. This 100% deposit bonus allows you to enjoy 100% bonus on every deposit up to $1,000 on your trading account, which will allow you to double your funds, increase your margin, double your equity, which will allow you to grow your account in the quickest way possible. Right. So the key here is, because there's no NFP, then what we are going to focus on here is just our CAD high impact news. So our CAD high impact news is what's going to lead to us simply focusing on trading the Canadian dollar. High impact news. Now, when it comes to NFP itself, okay, the NFP has been postponed until Wednesday, the 11th of Feb. So Wednesday, the 11th of Feb is when NFP will be postponed to, and that's what we're going to focus on, trading NFP rather on Wednesday, the 11th of Feb. But for now, the focus today will be simply focusing on trading our CAD high impact news. So the CAD high impact news will be our focus today. So basically, we'll look at CAD related currency pairs. Okay, I'll also go through dollar pairs as well, just to make sure, in case there might be a bit of volatility on the Canadian dollar itself. So I will go through the USD pairs as well, but the main focus will be strictly on the Canadian dollars for high probable, high volatile moves. So those CAD will include USD CAD, we've got Euro CAD, GBP CAD, CAD JPY, Aussie CAD, Kiwi CAD, as well as US oil. Those are the main ones we'll focus on, but I'll also analyze the USD pairs as well for those that are going to be looking for intraday trading opportunities as well. And then come next week, Wednesday, 11th of Feb, when the official USD non-farm payroll will be released is when we'll trade NFP officially on Wednesday as well. So we'll have 2 live trading sessions, which will include today as well as next week Wednesday regarding these high impact news. Right. Now, the strategy itself, the strategy that I'm going to implement is a strategy that consists of identifying high interest levels, drawing those high interest levels, analyzing the markets at these key levels, and looking for confirmation of entry signals. This strategy is basically suitable for 3 types of people: those that want to trade high impact news, those that are intraday traders, and those that are swing traders that want to look for intraday opportunities for low risk, high reward trading opportunities. And the best time to trade the strategy is when there is high impact news, or if you're a day trader looking for intraday trading opportunities. This is the strategy that I'll be using. This strategy consists of 5 steps. It consists of identifying our high interest levels, drawing those high interest levels, analyzing the markets at those high interest levels, looking for confirmation of entry, and then obviously placing the trade and capitalizing on those opportunities that present themselves in the market. This strategy I'll break down in a little bit more detail after I've analyzed the markets, taking the trades for today's session. As again, this is a live trading session, my main focus for today is going to be looking for opportunities to capitalize on the market from. So that's going to be the focus of today. So what I'm going to do is I'm going to open up my price chart and going to move over to our setup, where I'm going to be looking at the currency pairs of focus for today. So if I change my screen here, open up the charts, we'll see here the focus here. So we've got AUD USD, Euro dollar, GBP USD, Kiwi dollar, USD CAD, USD CHF, USD JPY, Euro CAD, GBP CAD, CAD JPY, Aussie CAD, Kiwi CAD, USD ZAR, XAU USD, S&P 500, NASDAQ, US 30, and US oil, which is WTI crude oil. So we'll start with the CAD pairs first. And with the CAD pairs, we'll do our analysis. We'll analyze the market on the CAD pairs, and then we'll do USD pairs as well, just to make sure, for those of you that are looking for intraday trading opportunities as well. So that's going to be the first priority of process. Okay, so let's start here. So we've got USD CAD. I'm on the 15-minute time frame. So I'm on the 15-minute time frame here. I'm going to switch over to the 4-hour time frame. And what I'm going to do is identify potential supply and demand levels, starting with the first level I see here, which is a potential demand here on Feb the 5th, 1600-hour candle, where price pushed up with high volume. Now, if we talk about supply, our potential supply level will be all the way up here, January 23, 1600-hour candle, where price pushed down with high volume. That is the most recent potential supply level. So this is on the 4-hour time frame. I'm going to switch to M15 to draw the levels. And as we go to the 15-minute time frame, we'll use our FX volume to help us identify and confirm those potential levels, starting with this level here, which is no longer relevant, and this one over here, which is still relevant here, high volume spike, where price consolidated and then pushed up with high volume. Then we've got the next level down here, and the next one down here as well. That is our demand. Okay, I'll leave that for now, and then focus on identifying potential supply, which we said was around January the 23rd. So January 23, we're going here to see if there's any clues here. First of all, I see something here on January 27th. Let's see if there's any clue here. Looking for high volume spike where price pushed down with high volume here. I see one over here, this level here. Okay, this is no longer relevant, so delete that, and then we can move on to January 23rd. We want to look for levels where price pushed down with high volume. I see one over here. I see another one here, which is no longer relevant. I see another one up here. This one up here, we'll have a look at, and this one here as well. So moving it a bit, start here. So we've got this level here, price push down with high volume. Got this level over here, and this one over here, which is pretty much in the same zone over there. So delete that one, and we've got the next one over here, which is pretty much basically we've got a zone. Okay, a zone where price pushed down with high volume. Well, initially price consolidated and then pushed down with high volume. I'll use this rectangle just to put in the area here so that it does not confuse you, and you can see exactly the zone that I'm talking about. Okay, there we go. And then we'll adjust this one properly. All right, so that is our zone over there. So as we go back to confirm the levels here, zoom out, delete this here. So we have a level here on January the 23rd, 1715 candle, 945 candle, 315 candle, and 015 candle. All areas where price pushed down with high volume, giving us potential supply levels. And then our demand levels here on Feb the 5th, we have a level here, 1830 candle, another level here, 1700-hour candle, another level here, 1630 candle as well. These are areas where price pushed up with high volume, and these here are our demand levels. So this is USD CAD. If we look at now, we've got a level over here of demand number 1, demand number 2, demand number 3. And if I zoom out a bit, we've got supply number 1 all the way up here. So this is USD CAD. So that's the levels we'll focus on for today when it comes to dollar CAD. If I zoom in a bit more here, just so you can see, there we go. Okay, so that's going to be USD CAD, the first symbol of the day. Okay. Next is going to be Euro CAD. So we're done with dollar CAD. We're going to move on to Euro CAD now. So 15-minute time frame. We're going to switch to the 4-hour time frame to identify potential supply and demand areas. There's a potential level over here on the 5th of Feb, which looks like a potential level of demand where price pushed up with high volume. This is Feb the 5th, 1600-hour candle, and then supply looks like we'll have to go all the way. If I zoom out here, looks like all the way up here, January 28th, 1600-hour candle where price pushed down with high volume. However, if the current demand level doesn't show us any signs, we do have another potential level here on Feb the 3rd, 1600-hour candle where price consolidated before pushing up over there. So 2 potential demand levels and then a supply level here on the 4-hour time frame. Then we switch to M15. We draw the levels. I see a potential level here which is still relevant. Another one here, no longer relevant. One down here, which is still relevant. Another level here, no longer relevant at all. If I switch over here, well, let's start with these ones first. So here's the first level. That's the first level. Then the second level down here. Feb the 5th, 2245, 1700 hour candle with price pushed up with high volume. Okay, that is that. Now, if I move down here, we did have that other level on Feb the 3rd. Let's see if there's any other levels I can see here. And there are other levels which are no longer relevant anymore. Okay, there's one over here. Okay, so we've got this level here. Seems to be making a zone here on Feb the 3rd. With price pushed up with high volume, as we can see over there. So this is Feb the 3rd, 1500 hour candle, where price pushed up with high volume. And basically what we have here is we have a zone over here for this level. Okay, and again, what I'll do, I'll add in this rectangle so that it does not confuse. So that is our demand. Now for supply, put this in here on the high of the day. Then we're going to go back to Jan 28, where we identified our potential supply. Now, Jan 28, I do see some clues over here. First, I want to have a look at Feb the 2nd, because there seems to be some clues happening here. I see high volume spike here, which could potentially be still relevant. So I'll add this in and then I'll update if not relevant anymore. So this level over here on February the 2nd. Then I see another potential level here as well on February the 2nd. Another one up here. And that seems to be it. So there's a level here where price pushed down with high volume. And another level here, which seems to be a zone. Okay, and with the zone, what I'll do is add this rectangle just so it does not confuse. So basically, Feb the 2nd, we have 1500 hour candle, 1000, 815 candle, all levels of supply where price pushed down with high volume, and the supply level still seems to be relevant. Okay, so that's that. And I'll focus on Feb the 2nd for now. Okay, if we need to go back in time, we'll have a look at Feb or January 28 for another potential level of supply. So we'll keep this there. And then we'll go back to current price action to have a look at what's happening. And as you can see here, we have demand number 1, demand zone number 2, supply number 1, and supply zone number 2 all the way at the top there. But for now, we'll just focus on the most recent levels here. And this is on EuroCAD. If you guys are with me so far, then make sure you have a look at this, because this is the levels that I'll be focusing on EuroCAD when looking for trading opportunities. Okay, so that is EuroCAD. Next is going to be GBP CAD. So GBP CAD on the 15-minute time frame, switch to the 4-hour. to identify potential supply and demand levels. See a potential level here. Could be a demand level where price pushed up with high volume here. This is Feb the 5th, 1600 hour candle. And then potential supply. We've got a level all the way up here, Feb the 4th, 1600 hour candle, where price pushed down with high volume. Switch over to the 4 hour time frame. Start with Feb the 5th, using our high volume there to help us identify potential levels. And there's quite a lot happening here. So I'll just add in here and then we'll take it from there. So there's even more clues here. See a big clue over here. Another clue over here. Another one here. Another one over there. This one here. This one here. This one here. This one here. Okay, quite a lot happening here. So we'll zoom in a bit. Start with, then there's another one here. So we'll start with this one here. That's the first one I see. There's another one I see here. This one I see here. Then there's this one, which is pretty much in the same zone. So I'm going to delete that one. And basically, delete these ones, which is no longer relevant. Delete this one. Okay, and these are the ones that are still relevant, but these ones are making what we call a zone. So add the zone in, again, just to not confuse. There we go. So what we have here is that. Then I still have more to do here. So there's this one up here. This one here, which is a zone as well. This one here. This one here, which is in the same level. So I'll leave that one. Then if I zoom in a bit more and have a look, these one all seem to be in the same area. So what I'll do is I'll draw the top there and the bottom, which is that same level there. Basically, what it seems like here is we've got two zones. So there's this zone here, then there's this zone over here. Then again, what I'll do, add in the rectangles so you can see the zone and not be confused. Okay, so let's go. February the 5th, we have 2345, 2200, 2145, 2130, 2100, 1700, 1400, 1100, 1000, 730, 445, 415, 400, and 300 hour candles. All levels here at the top where price pushed down with high volume, and here at the bottom where price pushed up with high volume to give us our supply and demand levels. So what I will do is I'll just focus on these levels for now. The other level we have here that we drew earlier we'll leave for now and just focus on that for continuing further. So these are the levels for GBP CAD for the session today. So we've got supply zone number 1. Then we've got supply zone number 2, demand number 1, and demand zone number 2 and demand number 3 below. These will be the levels of focus for the session today on GBP CAD. moving along, we're going to go to CAD JPY. So CAD JPY, switch to the 4-hour time frame from M15. Identify potential levels, starting with this first level here, which could be a potential supply level. This is Feb the 5th, 1600-hour candle, where price pushed down with high volume. May not be relevant anymore, but we'll have a deeper look on the 15-minute chart. Demand seems to be a level over here, Feb the 3rd, 1600-hour candle, where price pushed up with high volume. And then we have potential supply is this level over here on January 23, where price pushed down with high volume. That may be the next potential supply if this current level over here is no longer relevant. So that's where we can switch to the 50-minute time frame. Start at this level here. Okay, this one's still relevant. Feb the 5th. Zoom out a bit. Then we've got this level here, no longer relevant. This level here, let me see. No longer relevant. This level here, still relevant. And then let's see if there's any other levels here. No, that's it. So we do have a more recent supply level, starting with this level over here. Okay, so basically this is like a zone. And again, put in the rectangle to not confuse. There we go. So we've got Feb the 5th, 1400-hour candle, and 1700-hour candle are areas of supply where price pushed down with high volume. Okay, now for demand, we'll start at the demand level, which is all the way here in February the 3rd. And let's see. Let's zoom in a bit more here to have a look. And we do have a level over here, which is still relevant. And this one over here also still relevant. And this one over there. And this one down here, and this one down here. Another one down here, and another one down there. So starting with the first one. There we go. Second one down here. Okay, and the third one is all the way up here, but this is all part of a zone, so I'll leave that out for now. Add that one in, and this one, pretty much the same level. And this one over here, and this one over here, which is part of a zone as well, which will do this. So, okay, there's the first zone, and then here's the second zone over there, using the rectangle to add in the zone as to not confuse. And there we go. So Feb the 3rd, we have, oh, and the zone over here as well, which I forgot to add. All of these are zones. Perfect. So Feb the 3rd, 1900-hour candle, 1700, 1630, 1115, 1000, 530, and 200-hour candle, all areas of demand where price pushed up with high volume. Okay, and then the next level here that we're going to look at is the next potential supply above this current level if price breaks above. And this level we identified around January 23rd, which we can see over here. Starting with the clues here is this one here, no longer relevant. This one here, no longer relevant. This one here, still relevant. There we go. Then we have this here, not relevant anymore. This one here, not relevant anymore. The one right next to it, still relevant. And this one here, not relevant. This one, not relevant. This is Feb 23. These are areas of supply where price pushed down with high volume, which we have here January 23, 1815, and 930 candles. Those are our next levels of supply. So now if we go back to the current price action and have a look here, we have supply zone number 1 over here, supply zone number 1, and then supply 2, supply 3, then demand zone 1, demand zone 2, and demand zone 3 all the way at the bottom over there. So what I'll do is I'll add this one like this, and these will be the levels of focus for CAD JPY for today's trading session. There we go. Next is Aussie CAD, AUD CAD. So Aussie CAD, we'll go to the forward chart. Identify potential levels. So this is not relevant anymore. We may have a potential supply here where price pushed down with high volume. Then demand, we'll look at this level over here. So Feb the 2nd, 1600-hour candle where price pushed up with high volume. And Feb the 5th, 4 a.m. candle where price pushed down with high volume for potential supply and potential demand over here. Then we switch to the 15-minute time frame using our FX volume to help us identify levels, which we can see here are no longer relevant. No longer relevant. This one here, no longer relevant. This one here, no longer relevant. And this one here, still relevant. This one here and this one here, still relevant. And this one here, not relevant anymore. So that's going to be the first level, the second level, and the third level, which is pretty much in the same area, all making what we call a zone. And I'll add the zone in so we can see visually. Right, so Feb the 5th, we have 3 or 400-hour candle, 315, and 300-hour candles, all areas of supply where price pushed down with high volume. Next will be our demand level, which we identified over here in February the 2nd. We go to Feb 2nd and have a look. These levels here, not relevant anymore. This one, not relevant anymore. This one is still relevant. So we'll add this one in. Then, not relevant anymore. This one here, not relevant anymore. This one here, not relevant. This one here, we do this, not relevant anymore, as well as this one here. So we may need to find another potential level below. But the first one here is Feb the 2nd, 8:15 candle. So what I'll do is I'll add this one in here, then go back to the 4-hour chart to have a look and see where the next potential level could be, and it seems it can be all the way down here, which is around January 23, 1600-hour candle, where price pushed up with high volume. Then we'll switch to the 15-minute chart, jump to Jan 23, and we do have a level here, which is still relevant. Another one below here, which seems to be not relevant anymore. Then this one down here is still relevant, and the spike here, and these three over here. So starting with the first one is this one here. Next one is up here. This one here, which is in the same zone, so I'll leave that for now. Next one down here. This one, same zone. And this one down here. So, January 23, 1930. Then January 22nd, 3345, 1900, 1645, 1630, and 1530 candles, all areas of demand where price pushed up with high volume. Okay, so that's demand. Now for supply. Okay, so for supply, I do see a clue over here, another clue where price pushed down with high volume on these candles here. Okay, so zooming in a bit more here, so we can see just fix this one here. Okay, then we've got this one here, this one here, which is in the same zone, this one here, and this one over here, which is in the zone. Okay, so for the zone, just to add those in, again, to not confuse, and draw the rectangle in so you can see the whole area. And this here is Feb the 4th. We have 1600 hour, 1630, 1700, and 1730 candles, all areas of supply where price pushed down with high volume. So now, if we have a look here, we have supply zone number 1, supply zone 2, and supply zone 3. Demand number 1 here, demand 2, 3, 4, and 5, all the way at the bottom there. But again, the focus for now will be just the most recent levels that we can see over here. Okay, so this is Aussie CAD. The levels of focus for today's trading session. Next up is Kiwi CAD, NZD CAD. So Kiwi CAD, NZD CAD. Switch to the 4-hour chart and identify potential levels, starting with potential supply here, Feb the 5th. We price pushed down with high volume on the 1600-hour candle, and then demand. We look at this level here, Jan 23, 1600 hour candle, where price pushed up with high volume. Okay, then go to M15, identify potential levels, starting with this one here, not relevant, this one here, not relevant, this one here, still relevant, this one here, and here, another one here, which is no longer relevant, this one not relevant anymore. Then what I'll probably need to do is go to the day before, as I can see potential levels. Over here, here, and here. So let's start with Feb the 5th. This is first level here. Okay. Second one up here, which is like a zone. And the third one, oh, just below here. So I'll just move this slightly and then just focus on these here, which is a zone. So add that in as well. Then, so that's Feb the 5th, 1445, 1430, and 1400 hour candle. And then Feb the 4th, there's this level here, this one here, and this one up here, which make these two a zone. So again, the zones will just be areas covered with a rectangle, so that is not confusing. Now if I switch out now, I've got Feb the 4th, 1630, 1700, 1730, as well as Feb the 5th, all areas of supply where price pushed down with high volume. And then demand, we go to Jan 23rd, which we identified on the 4-hour chart, and have a look. Here's the first one here, not relevant anymore. And there's this one here. I'll just do this here, just to draw this in, just to make sure that we don't have like a zone here. So let me go back here quick and see. Yeah, so here we do. This level is still relevant. Keep that in. Go back to Jan 23 and see if there aren't any other levels here that I can see. So on January 23rd, the only level we have here is the 2145 candle. And then January 22nd, okay, there are quite a few levels here that I can see, which we'll focus on there. So here's the first one here, no longer relevant. Second one here, no longer relevant. Third one here, not relevant. Fourth one here, this one is relevant. And this one down here as well. So these ones will delete as they are no longer relevant. So basically what we have here is January 22nd, 1530 and 1315 candles, all areas of demand where price pushed up with high volume from here. So that's Kiwi CAD, where we can see price pushed down with high volume here, supply zone 1, supply zone 2, supply number 3, demand 1, demand 2, and demand 3 below that. So these are going to be the levels of focus for Kiwi CAD in today's trading session. There we go. Moving along, we'll go to US oil, WTI crude oil. As we can see over here, switch to the 4-hour, identify potential levels of demand and supply. We have a potential supply here, February the 5th, 1300-hour candle, where price pushed down with high volume, and demand, Feb the 3rd, 1700-hour candle, where price pushed up with high volume. Switching to the 15-minute chart, we're going to look to draw the levels using our volume to give us clues. We can see a clue here, which is no longer relevant, a clue here, not relevant anymore, as well as this one over here. Move along to the day before, which we can see a clue here, and another one up here, both still relevant. So that will be the first level, and the second level, which is basically like a zone. So Feb the 4th, 2100 and 2145 candles. Now for demand, we'll need to go all the way back here to Feb the 3rd and see if there's any clues we see here. I see a clue here, not relevant anymore. This one, let me see something. Yeah, actually that is still relevant. So anything below that is still relevant, as we may have a zone happening over there. So from this to this. Then another clue below here, which is no longer relevant anymore. See if there's any other clue here. No other clue, so we'll do this. Or we'll just focus on these for now. No, this one is no longer relevant. Okay, so I'll need to go somewhere below. But basically what I see here is just a zone, which I'll use a rectangle to show. But February the 3rd, 1500 hour, 1600 and 1900 hour candle, all levels of demand where price pushed up with high volume. Okay, I want to identify the second level of demand and potentially supply, since I've only got one level. So for the demand, the first clue I see is this one here. Let me focus on this one first before I go to supply. So January 27, 1300 hour candle where price pushed up with high volume. So we jump all the way down to Jan 27. All the way here. Let's see if there's any levels we can identify. And again, I want to add this one in quick just to see if there isn't anything that I can see here. Okay, this one is still relevant, so I'll keep that one there. And then this one down here. Okay, so Jan 27, we have 1530, 1015 candle, all levels of demand where price pushed up with high volume. Then we go back to the 4 hour and see for supply if there's anything else I can see here. And I do see a potential supply here on the January 30th, 1700 hour candle where price pushed down with high volume. Switch to M15, go to Jan 30, and see if there's anything I can see here. And I see this over here, as well as this over here, and this over here. So there's the first level I see, the second level here, and the third level, which is pretty much in the same area. Basically, we just have a zone here. And use the rectangle to identify. So we have here Jan 30, 1915, then Jan 29, 1700, and 1615 candles, or areas of supply where price pushed down with high volume. So now, if we go to the current price action and have a look, we have demand zone 1 here, demand 2, demand 3, supply zone number 1, supply zone number 2 at the top over there. And these will be the levels of focus for US oil, WTI crude oil for today. Perfect. Now, since we've covered our CAD related symbols, I'll go through USD as well, just in case we may see any moves happening intraday today. So starting with Aussie dollar, go to the 4-hour chart, potential supply, then demand, yeah, so potential demand, January 26, 1600-hour candle, and potential supply, Feb the 5th, 1600-hour candle where price pushed down, but in case price is broken, the next potential supply is Feb the 4th, 1600-hour candle where price pushed down with high volume. Go to the 15-minute chart and identify. So this one here, not relevant anymore. Not relevant. This one here, still relevant. Keep that in. And this one here and here, still relevant. Then I see more here. So these two or these three over here. So here's the first one. Here's another one, basically in the same zone as the other one next to it. And this one here. And this one over here, which is giving us a zone. There we go. So Feb 5th, 1400, 315, 300. Feb the 4th, 1730, 1700, 1630. All areas of supply where price pushed down with high volume. Now demand, we'll go all the way back to January 26 and look for areas where price pushed up with high volume. I don't see anything here, so we'll move to Jan 23, which there is a clue over here. That one's not relevant anymore, but this one next to it is. So that's the first one. There we go. Then another one below here. This one has the more relevant one. Yeah, and this one here as well. Okay, not relevant anymore. But this one below is. So January 23, we have 1700 hour, 2000 hour, and 2345 hour candle where price pushed up with high volume, giving us a demand level. So now if we go back and have a look here, there we go. We'll have supply number 1 here, supply 2, 3, supply zone number 4, demand 1, demand 2, demand 3 below. But we'll just focus on the more recent levels. And this is what we have here for Aussie dollar. Next, euro dollar. For our time frame, potential level here, potential level over here of demand. So potential demand level, January 23, 1600 hour candle, where price pushed up with high volume. Potential supply, Feb 5th, 1600 hour candle, where price pushed down with high volume. Go to the 15-minute chart, join our levels, which are still relevant. This one is not anymore. This one is still. This one next to it, not. Anyone next to it over here, not relevant anymore. So the one level we have here is Feb the 5th, 1600 hour candle, where price pushed down with high volume. Then if I move slightly next to it to see any other potential clues, let's see if these clues are still relevant. This clue here, this clue here is still relevant here next to it. There we go. And this one next to it over here, which is pretty much in the same zone. Okay, so this is Feb the 4th, 1515, 1600 hour candles, all levels of supply where price pushed down with high volume. Moving along, we go to January 23 to look for areas where price pushed up with high volume. I want to see this level quickly since I saw the candle over there. Okay, this one not relevant anymore. But we do see this spike over here, this one over here, this one here, and this one over here, where price pushed up with high volume. Where if I zoom in a bit, we can see here basically we have a zone here. I'll just add the top and the bottom there, again just to not confuse, of a zone where price consolidated before pushing all the way up. And I'll use the rectangle to draw in that area. So if I zoom out now, have a look. We have Jan 23, 1345, 1300, 1100, and 1000 hour, all areas of demand where price pushed up with high volume. Okay, which is what I'll just focus on for now. So basically, what we have here is supply number 1, supply number 2, demand zone number 1, all the way at the bottom there for euro dollar. Next, GBP USD. Go to the 4-hour time frame, identify potential levels. First level there, second level over here, where this level here, Jan 23, $1,600 candle, where price pushed up with high volume for potential demand, and Feb the 5th, $1,600 candle, where price pushed down with high volume, giving us potential supply. Go to M15, join the levels, which are still relevant, where this one still is. See if there's any other relevant levels, and this one just above it. Over there, giving us a bit of a zone there. And this one up here, and this one here, which I'll focus on. Just these ones for now. So what we have, Feb the 5th, 1400, 1000, 445, 415 candles, all areas of supply where price pushed down with high volume. Demand, we'll need to go all the way back to Jan 23, which we saw in the 4-hour time frame, and we're going to go to M15 to identify. Let me go back. I want to see something. Okay, so this level might be relevant still. So starting with this one, let me add this in. I want to have a look. And yeah, not relevant anymore. So we go back there, and the next one will be this one down here. This one up here, which is in the same zone and also not relevant anymore. Same with this one here. And that one as well. So the next relevant ones are all these ones down here, which may be making a potential zone. Yeah, so this is the zone. I'll delete that one in the middle and just focus on the top and the bottom there. And we'll use the rectangle to draw that area. So what we have here is Jan 23, 11:30 candle, Jan 22, 16:30, 15:30, 13:15 candles, all areas of demand where price pushed up with high volume. So now if we go back and have a look here, got GBP USD, got supply number 1 here, supply zone 1, supply 2, supply 3, demand 1, demand zone number 2 all the way below. Okay, and that'll be the levels of focus for GBP USD today. Next is Kiwi dollar. So NZD USD 4-hour supply, potential supply, potential demand here. So January 23, January 26, 00 candle where price pushed up with high volume for potential demand, and January Feb the 5th 1600 hour where price pushed down with supply with high volume for our supply. Go to the 50-minute charts to draw in our levels, which are still relevant. This one here is still relevant. That one next to it also relevant, giving us a zone there. And these two over there. So this one here is part of the zone, and this one over there. So basically, we've got that over there. Feb the 5th, 1630, 1600, 400, 315 candle, all levels of supply, where price pushed down with high volume. There we go. Demand, we go all the way to Jan 26. Here's the one level here. I do want to see something. Yeah, that is more of a zone there. So we'll go back. There we go. So that's the one level. Next level are these two down here, which is like a zone. So I'll just focus on that part. Then another level here, which is no longer relevant, but this one down here still is. Okay. There we go. So Jan 26. 1300, 1630, 1645, 1915, all areas of demand where price pushed up with high volume. So here we go. Now what we have is supply zone number 1, then supply number 2 above it directly, then demand 1, and demand zone number 2 below. And this is for NZD USD. So that's NZD USD levels that we'll focus on for today. Next is USD CHF. So start on the 4-hour, identify potential levels. This looks like potential demand level, then potential supply. Maybe this one up here. So supply, Feb the 3rd, 1600-hour candle where price pushed down with high volume, and demand, Feb the 5th, 1600-hour candle where price pushed up with high volume. Go to M15, join our levels, which are still relevant. This one's still relevant. This one is still relevant. This one also still relevant. Then we do have a level up here, which, if I have a look here, is still relevant. So there's a clue there, another clue here, one down here, and yeah, this one over here, not relevant anymore. Okay, so Feb the 5th, we have 2345, 1730, 1600, where the two below here are potential demand levels, and the one up here is a supply level. Okay, then if I add this in here and move along to Feb the 4th for that supply, see if there's any clues here. No clues so far. And the first clues I see are these two up here. So zoom in a bit so we can draw it in. So this level and this level, pretty much in the same zone. So that's going to be that for now. All right, so going back, we have Feb the 3rd, 030, 045. Now if we look, we have supply 1, supply 2, demand 1, demand number 2 on USD CHF. These will be the levels to focus on for today. On dollar Swiss. Next is dollar yen. Go to the 4-hour. I see a potential demand here, Feb the 5th, and a potential supply, Feb the 5th as well. So 1200-hour candle supply, 1600-hour candle potential demand. Go to M15 and have a look. Using our clues here. This clue not relevant anymore. This one not relevant anymore. Same as this one. This one though still relevant for supply. And this one here, which is like a zone. Then here, moving to the day before for potential clues. I see this one here and this one here as well. And this one below and this one down here. So take this one, put it here, this one here, this one there, which is the zone we have, and then this one below. So basically Feb the 4th, 245, 1000, 1700, 1930, and then Feb the 5th, 1400 and 1445. So for supply, we've got one zone of supply here, which I didn't add in, so I added it now. We may need another supply level in case price breaks above. So if I add this one in, go to the 4-hour chart and have a look. The next supply will be this one here, January 23, 1600-hour candle, where price pushed down with high volume. So we go to the 15-minute chart. We go to Jan 23, and now we have a look. Let me add this in quick and see. No, not relevant anymore. So go back. The next one will be this one up here. This one here, which is in this same zone, so I'll leave that one out. This one here, same zone as well. So we've got a little bit of a zone here. Then this one here, not relevant. This one here, still relevant. And this one here, not relevant anymore. So we've got Feb. Now this is January 23. January 23, 930, 1100, 1815. All levels of supply were price pushed down with high volume. So now, okay, so basically what we have here is we've got supply number 1, and then supply zone number 2 all the way on the top here, supply number 3 all the way at the top there, demand zone 1 and demand zone 2 all the way at the bottom over there. But for now, these will just be our levels of focus. Now, moving along. Gold, XAU USD. For our chart, potential demand here, Feb the 5th. Potential supply over here, Feb the 4th. So Feb the 5th, 1 a.m. candle, pushing down, and yeah, this one's not relevant then. The next potential demand will have to be potentially over here on Feb the 2nd, where there could be an area where price pushed up with high volume. So we've got to M15, starting with our clues on Feb the 5th. See this clue here, not relevant anymore. And this one as well. Let's see this one here. This one's still relevant. Then these two here, which are still relevant. There we go. So Feb the 5th, 1100, 315, 300-hour candle. And then for demand, we go to Feb the 2nd. Okay, for this one here. So Feb the 2nd, we have a level here, 1100-hour candle. Then what I'm going to need to do is go back to the 4-hour and see the next potential demand, which is in this area around Jan the 2nd or Jan the 5th, 1 a.m. candle on the 4-hour. So go to M15, jump to Jan the 2nd or Jan the 5th. Yeah, Jan the 2nd, we've got this one here. And this one slightly below, which is a zone. Okay, so that's the zone we're looking at. Between up here and up here. Then the next level is this one down here. Right, so Jan 5th, 1 a.m., 300, 500-hour candle, all levels of demand where price pushed up with high volume. So now we go to on price action. We've got supply 1, 2, and 3, demand 1 at the bottom here, and demand zone 2 and demand number 3 all the way below. So for now, we'll just focus on these levels here. There we go. And this is going to be on gold, XAU, USD, the levels of focus for today's session. Next, we'll move on to US 500, which is S&P 500. Go to the 4-hour chart, identify potential levels, starting with a potential level of supply here, and another potential supply in case the current one price is broken through, and then demand, we've got a potentially something here around, actually, we'll look at around December 1700 hour candle, where price potentially pushed up from the zone. Okay, so 15-minute chart, Feb the 5th, clues. First clue here, not relevant anymore. Second clue right next to it, still relevant for supply. Then you got this one here, this one next to it, this level here, and this level over here, and this one over here. This one not relevant anymore, and this one not relevant anymore. Delete. So Feb the 5th, we have 1645, 1430, and 1200 hour candles, all levels of supply where price pushed down with high volume. Then demand, we need to go all the way back here to December 17. See if there are any levels here, any clues. Yep, here's the first one. Here's another one, which is it's in the same area, so that's more of a zone. We've got this one down here as well. So basically this one down here, and this one over here, which is giving us a zone. Okay, and we'll add in the rectangle here to join our zone. So 17 December 2025, 2 a.m. and 5:15 candle for our demand zone, where these are levels where price pushed up with high volume. So here we go now. We'll just use those for now. US 500, S&P 500, supply 1, supply number 2 above, supply number 3, and demand zone number 1 below. These will be the levels of focus for S&P 500 today. Next is UT 100, which is NASDAQ. Start on the 4-hour. Identify potential supply here. Another one right next to it. And then demand. We need to go all the way to November 21st, where price pushed up with high volume on the 1700-hour candle. And then our supply is Feb the 5th, 1300, and Feb the 5th, 1700 hour, where price pushed down with high volume. Go to the 15-minute chart. Look for the clues, starting with this one, which is still relevant. This one, not relevant anymore. This one here, not relevant. This one here, got a zone there. And the one next to it, still relevant. Then this one here, and this one over here, which is no longer relevant. And potentially this one here. So yeah, that's the first one. The second one, same zone, so leave that one out. And this one and this one, same area, leave that one out. And then this one and this one, not relevant anymore. So I do see another clue over here and over here. Those are the relevant levels. Right, so Feb the 5th, 1645, 1430, 1415, Feb the 4th, 1630, and 1645. All areas of supply where price pushed down with high volume. Next, we go to the demand, which is November 21. And what we're looking for here, areas where price pushed up with high volume. And I don't see any clues here, so we'll move this one lower. Go back to the 4-hour chart. See where the next potential demand level is, which is all the way here. September the 10th, 1700-hour candle, 2025. So let's go to M15 and see if we can get to September the 10th, which we can here. And now we look for clues. No clues over there. Nope, no clues. So move this one lower to this area over here. Yeah, so they've got a zone over here. That's the top of the zone. And the bottom of the zone is this one over here. Okay, so what we have here is September the 8th, 9 a.m. and 1500-hour candles, all areas of demand where price pushed up with high volume. And there we go. Right, there we go. So this is a zone. Now if we go back, have a look. I'll zoom out a bit. Okay, NASDAQ UT100. We've got supply 1, supply 2, supply zone 3, demand zone number 1, all the way at the bottom over there. So it'll be the level of focus for NASDAQ, NAS 100, UT 100 for today. And then lastly, we've got US 30 Dow Jones. For our chart, potential supply here, and then demand. All the way down here, January 21st, 1300-hour candle, where price pushed up with high volume. And Feb the 5th, 1700-hour candle, where price pushed down with high volume for supply. So potential supply, potential demand. Go to the 50-minute chart, look for our clues. First one is this one, still relevant. Same with this one, and this one, and this one. And then this one, no longer relevant. And this one, not relevant. So we'll delete that one. Zoom in a bit so we can see. There we go. Got a zone there. And there we go. So we've got two zones here, from here to here. Another zone from here. So these areas here, Feb the 5th, 1645, 1630, 1445, 1430, 1415, all areas of supply where price pushed down with high volume. And then for demand, we go all the way back to January 21st. And we see some clues here. Here's one clue. Here's another one. Yeah, those two are the most recent levels. So delete this one. Add the first one there. And then the second one down here. And this is Jan 21st, 1600 and 1630 candle. All levels of demand where price pushed up with high volume. So now if we go to current price action, there we go. What we have here is supply number 1, supply zone 1, supply zone 2, supply 3, demand 1, demand 2. And these are the areas of focus for US 30 Dow Jones for today's session. Okay, so those are all our symbols for today. So we've got AUD USD here, Euro dollar, GBP USD, Kiwi dollar, dollar CAD, dollar Swiss, dollar yen, Euro CAD, GBP CAD, CAD JPY, Aussie CAD, Kiwi CAD, gold, S&P 500, NASDAQ, Dow Jones, and crude oil, WTI crude oil. Okay, so those are the levels. Now what I'm going to do now is start looking for trades, since I can see things are setting up already. And yeah, start placing some trades before we move along. Okay, so the first one will be AUD USD, which is currently testing our supply level. So because price is currently testing the supply, that's giving us a signal to look for potential selling opportunities, with price currently giving us potential setup, which is what will be of focus today. So if we have a look, I want to zoom in a bit here on Aussie dollar. Price is currently ranging at our supply level, giving us potential to place a sell stop order with a stop loss. I'm not going to put on the most recent fractal high. I want to put on this fractal high slightly above there from Feb the 5th, and then entry most recent fractal low, which is pretty much the bottom of the range, where we're looking at the entry at around 0.6976, stop loss at 0.6994. This is on Aussie dollar. Okay, so that's Aussie dollar. I'm going to place a sell stop order over there. So add that in, submit, and now we have I have a sell stop order on Aussie dollar. Next, symbol we'll look at will be not euro dollar, currently in no man's land, because we've got our supply at the top there, demand at the bottom. Price is currently coming down off the supply, but not testing any level at the moment, so no trade for now. Same with GBP USD, currently in no man's land. A high probability setup would be for price to come up and test the supply level before looking for selling opportunities over there. Then we've got Kiwi dollar, which is currently testing the supply zone here, which is a setup here that I can take, where I can place a sell stop order with the stop loss at the fractal high above the supply zone number 1, and entry price most recent fractal low over there, which basically is giving an entry price at around 0.55986, stop loss 0.6005. Okay, that's Kiwi dollar. Next is USD CAD, which is currently breaking below demand number 1. Do this. are just coming down below to test demand number 2. So for high probability setup, rather wait for price to push down, test demand number 2, where I can look for potential opportunity to buy on dollar CAD. But for now, just wait for more clearer indication from the price action. Next is dollar Swiss, currently testing the supply, where this is giving me a signal to sell, where I would place my stop loss on the top of the range, entry price at the bottom of the range over there, where that's giving me an entry at around 0.7773 and stop loss 0.7787 on USD CHF. Sell stop pending order. Next, we've got dollar yen, currently testing the supply, giving me a potential sell signal there. With the stop loss, I'll put, let me see first, the entry price will be here. Yeah. So entry price will be the most recent fractal low. Stop loss, not the most recent fractal high, but the second most recent fractal high above the supply zone over there, which basically is giving an entry at around 156.97 and stop loss 157.18 on USD JPY. That's that. Next is Euro CAD, which is breaking below demand number 1. So for high probability setup, wait for price to test demand number 2, or I can look for buying opportunities from there. But other than that, that's going to be a no trade for now. The GBP CAD currently in no man's land, so that's a no trade for now since price is in the middle there. High probability setup would either be for price to come up, test the supply level to sell, or demand level to buy. So no trade for now. CAD JPY currently breaking through supply zone 1. So higher probability setup is if price continues to push up, rather wait for price to test supply number 2 to look for selling opportunities. But for now, I don't see any clear indication there, so no trade for now, and wait for clear indication from the price action before looking to trade. Next up is Aussie CAD, also currently in no man's land. Rather wait for price to come up, test supply zone 1 to look for clear selling opportunities at that level. But for now, no trade. Next is Kiwi CAD, which is currently testing supply zone number 1, which is giving a potential signal to sell, where my stop loss will be the fractal high above the supply zone, and entry price most recent fractal low over there. So if we're talking about entry, stop loss, we've got entry at around 0.8186, stop loss at 0.8206 on Kiwi CAD. moving along. Just turn that off. There we go. We're going to move to gold XAU USD, which is currently testing our supply level here, giving an indication to sell, where the setup I can see here is a potential sell stop order with stop loss on the fractal high above supply zone, supply number 1, entry most recent, fractal low down here. So entry at around 4,862 and stop loss 4,953. Moving along, we have US 500 currently in no man's land for high probability setup. Rather wait for price to come up, test the supply zone there, supply level, to look for selling opportunities. But for now, price is in no man's land, so no trade for now. Same story with NASDAQ UT 100. Price still in no man's land, so high probability setup is to wait for price to test the supply zone for looking for opportunities to sell. And the same story with US 30 Dow Jones. Price is in no man's land, so rather wait for price for high probability setup to test our supply level or our supply zone to look for opportunities to sell from that level. Then we've got US oil, which is selling up here, which hopefully what I'd like to see, since price is coming off the demand zone here, there is a potential setup to buy. Price has already moved up there. So if I can see price push back down into this zone, then I'll take this buy stop order on entry at 62.96 and stop loss at 62.01 on US oil. But until then, I'm not going to put in the trade as yet till I see a clearer entry. And that's going to be US oil. Again, entry at around 62.96, stop loss at around 62.01 is where I'd like to enter on US oil. Okay. That's the potential setups for now. Let's do a quick run through again. If there's any new trades setting up. Nothing so far apart from what we've just done. So basically what I'll do now is, in the meantime, for the next 10 minutes, I'll quickly explain the strategical approach that I have used for looking for trade opportunities on the setup, which if I share my screen, you can see this is a 5-step process, which includes step 1, identifying levels, step 2, drawing the levels, Step 3, analyze the price action. Step 4, confirmation of entry. And step 5, placing the trade. All steps which are followed in every single step along this process so far. So breaking it down, step number 1, which is identifying our potential supply and demand levels. We do that by identifying supply and demand levels on the 4-hour time frame using our forex volume, which then helps us to identify high probability sell zones and high probability buy zones, where supply level is a horizontal price level where price went down with high volume, and a demand level is a horizontal price level where price went up with high volume. That's step number 1. Then we go step number 2 is to then drill down to the 15-minute time frame and draw those potential supply and demand levels which were identified from step 1 on the 4-hour time frame, again on the 15-minute time frame, using our forex volume to help us to identify exact price points where the smart money stepped into the market with high probability and high volume. Then we go to step number 3, which is analyzing the price action, which is done on the 15-minute time frame, as you've seen so far, where I analyze the price action and see the clues from the smart money, whether retail trading is being induced in terms of amateur retail trading, and analyzing the most recent price action to give me the most recent analysis and potential setups to confirm to enter, where I'll use step number 4 is to use a confirmation of entry and identify which current level of supply or demand price is currently testing at the current moment, where if price is testing a supply level, then I look for sell opportunities from the supply level, the most recent supply level, down to the most recent demand level. And if price is currently testing our most recent demand level, I look for buying opportunities from the most recent demand level up to the most recent level of supply. This is supply and demand 101, where sell at supply, buy at demand, and doing it from the most recent supply and demand using the most recent price action analysis to do so. So that is step number 4. Look for confirmation of entry. And once we've looked for confirmation of entry and confirmed, then we then use step number 5 to place our order, where we place the trade before the high impact news is released, as you've seen so far, ideally, and using one of the following 3 options to place the entry, as well as the same one of 3 options to place the stop loss to give us a high probability setup to enter a buy or a sell, where we can use our most recent fractal high or low, or the top of the range if the market is moving sideways, or the candlestick high or low if there's a specific candlestick that will be used to place the entry or the stop loss. And use one of those 3 or a combination of any one of those 3 to place the order in step number 5. Now again, anytime you place your order, you always want to make sure that you manage your risk diligently by having a predetermined risk factor, which will then allow you to, once you know where to enter the market, where to exit the market with a loss specifically, and where to exit the market with a profit. And knowing this then with your predetermined risk factor will then help you to calculate your trade risk, your point at risk, as well as your volume that you're going to use for that specific trade order, in order to make sure that you are trading with your predetermined risk factor and you're not trading more than what you have or willing to lose per single trade of your account. Very, very important when it comes to managing your risk in trading. Okay, so that is very, very important. Now, since that is the 5-step process, I'm going to go back to the chart to see if any new setups have happened. And I see a setup here on US oil where we want the entry at 62.96 and stop loss at 62.01 is currently setting up, and that is the setup I want to place my order. So I'm going to go ahead, place my trade order here on US oil, which is very important, which is going to be a buy stop order. Okay, so there's my buy stop order, which seems to have triggered already now. So I'm in on this trade. And now we continue and look for, see if there's any new potential setups happening at the moment. No potential setups at the moment. Oh, we do have a setup now on dollar CAD, which I will be looking to enter here. So dollar CAD. Since it's testing supply demand number 2, I've got a potential buy order I want to place, buy stop order on the high of this candle over here, which will most likely be a fractal high at the close of this candle, and then the most recent fractal low. I'm not going to use this fractal low here. I'm going to use the fractal low below demand level number 3. So entry is around 1.3684, stop loss 1.3650 on USD CAD. So that's USD CAD. I'm in now. Let's go here. Dollar Swiss, still fine. Dollar Yen, fine with the order there. Euro CAD, still in no man's land. GBP CAD, still in no man's land. CAD JPY, still in no man's land. Aussie CAD, still in no man's land as well. Kiwi CAD, still fine there. Gold, still fine. US 500, S&P 500, still in no man's land. Same with UT 100 and US 30 as well. And then we've got US oil, WTI crude oil. Okay, so USD JPY still sitting up there. Okay. Your cat's still in no man's land. So this looks like all the potential setups for today. The news will be released in 5 minutes. So do one more run through. News will be released in 4 minutes. Okay. News has been released now, so let's see if there's any volatility, especially on the CAD pairs. Not expecting anything from the dollar side. NZD, USD. Okay, we do see a little bit of volatility on CAD. USD CAD, we might need to update here. Dollar Swiss, fine. Yeah, EuroCAD is now pushed into the demand zone number 2 here, which is giving a potential to look for buying opportunities. So on the close of this bar, I'll update the order and then take it from there. GBP CAD is still in no man's land, but it seems like now it's pushing to the downside. So the high probability setup is for price to come down to the demand level to look for buying opportunities over there. CAD JPY pushing up. So the next high probability setup is for price to test the supply level number 2 to look for selling opportunities. Aussie CAD still in no man's land. Kiwi CAD is not triggered. Gold, no volatility there. US 500 looks like it's pushing up into the supply level, so I'll keep an eye on that one. US 30 still in no man's land. US oil triggered, still around entry. Then Aussie dollar, still fine. So the one I'll keep an eye on here is USD CAD to update and Euro CAD to update as well. Dollar CAD and Euro CAD. Okay. So in the meantime, while that's setting up, I just want to bring your attention to those that are trading at the moment. That did you know that a minimum deposit of $10 gets you access to a high leverage multi-asset trading account with CWG Markets, and this account is called the CWG Cent account, which makes you allowed to trade on MT5 using high leverage up to 1 to 1000 and EA automation supported, and getting access to trade diverse trading products at low spreads, which include currencies, stock indices, commodities, stocks, and cryptocurrencies as well. With just a minimum deposit of $10, gets you access to the CWG Cent account. So make sure, if you'd like to open a CWG Cent account, scan the QR code that you see on the top right hand side and scan the QR code to sign up and open an account, a CWG Cent account with CWG, and then be able to take advantage of the 100% deposit bonus, where you can enjoy a 100% bonus on every deposit up to $1,000 on your trading account, giving you access to double your funds, increase your margin, double your equity, and have the opportunity to grow your account in the most efficient way possible. So that is the 100% deposit bonus. But back to the charts. To see if anything is currently setting up. And if we have a look here, US oil still in break-even territory. Aussie dollar still fine. Euro dollar still fine. GBP USD still in no man's land. Kiwi dollar order still fine. Now CAD, what I want to do here is I'm going to delete this pending order since this is not relevant anymore. And it looks like I'll use the current bar over here as a potential entry and stop loss, but first we'll need to wait for it to close. We'll use the high of the bar for the entry, low of the bar for the stop loss. But in the meantime, what I do want to do is identify, do we have the next demand level, since price is testing demand number 3. So if I add this over here, go to the 4-hour time frame and see where the next potential demand is. Looks like it's all the way down here, January 30th, 1600-hour candle, where price pushed up with high volume. So go to M15. Well, firstly, I do see a clue here before I continue. At January 30, I do see some clues here, which is still relevant. I see a clue over here, and I see another clue down here, which seems to be the more relevant clue. So do this. So I'm going to skip January 30 and focus on Feb the 4th here, where we have areas where price pushed up with high volume. Feb the 4th, 1600-hour candle and 1000-hour candle. So that will be the focus for now. So if we look now and see, price is actually testing demand number 4 as well. That's the area price is bouncing off from. So we'll use this candle here that's testing the level as a potential entry opportunity. Okay, so that's USD CAD. Next, dollar Swiss triggered, still around break even there. USD JPY still fine. Okay, Euro CAD is starting to reverse now from demand number 2. So the potential setup here, which we'll need to wait for price to close, will be either the high of this bar, but definitely the low of this bar. If not the high of this bar, this high over here, which is a fractal area. So set that up for now. For now, just keep an eye on it for Euro CAD. Then so we've got dollar CAD and now Euro CAD on deck. Next will be GBP CAD, still in no man's land. CAD JPY, still in no man's land. Same with Aussie CAD. Kiwi CAD, still fine. Gold looks like it's pushing up. Continues to push up, then we'll need to look at potential opportunities at supply number 2. But still fine for now. US 500, still fine for now. UT 100, still fine for now, in no man's land. Same with US 30. And now I've got US oil starting to pick up with a little bit of volatility. Okay. And we'll be trading this one all the way up to supply number 1. So basically you just need to wait for 6 minutes for this candle to close and then place any trades as confirmation. Okay, looks like the volatility is picking up now. A little bit. Nothing major though. Yeah, seems like the volatility is only on the oil side of things. Yeah, all very volatile at the moment. Anyway, we'll wait 5 minutes before placing any new potential orders. USD CAD still setting up. Right. So now that the candle is closed and we can look for new setups. I'm going to start with USD CAD. I'm going to use the current bar where it has high volume to set up my entry and my stop loss. So entry price at around 1.3666 and stop loss at around 1.3645 for my buy stop order. There we go. So that's dollar CAD. Dollar Swiss, still happy with that. Same with dollar yen. Euro CAD now, I'll use the high of the bar as well for my entry price and stop loss the low of the bar with the high volume. So entry is at around 1.6129, stop loss 1.6105. Then all the other orders and setups still fine. So that's going to be basically it for the setups for today to keep looking out for the rest of the day and the next coming few days. And if you enjoyed the session today, if you could do us a favor and leave us a review, you can kindly leave a review by scanning the QR code that you see on the screen there. This will help CWG Markets to keep up the high standard of educational resources and webinar resources that it provides to the community. And if you'd like to get in touch with me directly, feel free to send me an email or a direct WhatsApp message by scanning any one of the QR codes or following any of the links that you see on the screen. And that's going to be it for today's session. The next webinar will be our weekly training webinar, which will be on Monday, the 9th of Feb, which will be the first webinar of the upcoming week before we do our next live trading webinar, which will be on Wednesday, the 11th, where we trade the official non-farm payroll event and indicators. But other than that, that's going to be it for today's trading session. Hopefully you enjoyed it. Feel free to get in touch with me and see you on Monday, the 9th of Feb. Bye for now.